This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC has stuck with its forecast that world oil demand will exceed pre-pandemic levels in 2022, although the producer group said Russia's invasion of Ukraine and developments around the coronavirus pandemic pose a considerable risk. In a monthly report released on Tuesday, the Organization of the Petroleum Exporting Countries, OPEC, maintained its forecast that world oil demand would rise by 3.36 million barrels per day, BPD, in 2022, extending a recovery from 2020's slump. The Ukraine war sent oil briefly above $139 a barrel in March, the highest since 2008, worsening inflationary pressures. COVID lockdowns in China, where a Beijing outbreak has prompted the resumption of mass testing, have curbed oil demand.
Germany is struggling to find a way to wrest control of a Russian-owned refinery that supplies most of Berlin's fuel, 4 people close to the matter said, fearing retaliation by Moscow if the site is nationalized and as Western firms hesitate to step in. The PCK refinery in Schwedt, majority owned by Russian oil giant Rosneft, is testing Germany's resolve to eliminate imports of oil from Russia by the end of the year under fresh European sanctions to punish Moscow for its invasion of Ukraine. The landlocked refinery is the source of 90% of Berlin's fuel and has received all its crude from Russia via the Druzhba pipeline since the plant was built in the 1960s.
Moving on to the top news in the energy sector.
Oil prices rose on Tuesday as tight global supply outweighed worries that fuel demand would be hit by a possible recession and fresh COVID-19 curbs in China. Brent crude futures rose 93 cents, or 0.8%, to $123.20 a barrel at 12:19 GMT, while U.S. West Texas Intermediate, WTI, crude rose 81 cents, or 0.7% to $121.74 a barrel. Tight supply has been aggravated by a drop in exports from Libya amid a political crisis that has hit output and ports. Other OPEC Plus producers are struggling to meet their production quotas and Russia faces bans on its oil over the war in Ukraine.
Spot market rates for liquefied natural gas, LNG tankers this week set annual records as traders bid up available vessels to meet rising global demand for the chilled gas, according to brokers. Soaring demand for LNG and buyers shunning Russian cargoes and vessels over its invasion of Ukraine have led to more long-term charters, limiting the supply of vessels to the spot market, said shipbroker and LNG consultancy Poten & Partners. Spot rates for transporting 160,000 cubic meters of LNG in the Atlantic Basin as $100,000 per day, and $85,000 per day for Asia, or the East of Suez, cargoes, said Poten's head of business intelligence Jason Fear. Next, we have the top news in metal markets. Argentina said on Monday it would introduce a new optional tax regime for copper producers that could potentially lower export duties in an effort to jumpstart national production. The measure, announced by Economy Minister Martin Guzman at a mining forum, follows conversations with provinces and companies involved in the sector, the ministry said in a statement. The measure is voluntary and incorporates progressivism and flexibility into the mining tax regime, providing greater certainty to investors, the ministry said.
Gold prices steadied on Tuesday after sharp early losses as a rally in the dollar paused, but gains were capped by expectations of steep rate hikes from the Federal Reserve. Spot gold rose 0.1% to $1,820.70 per ounce by 11:21 GMT, after earlier touching its lowest since May 19 at $1,810.90. U.S. gold futures slipped 0.6% to $1,821.70. The dollar index was little changed after a run to a near 2-decade high on Monday, which sent greenback-priced bullion nearly 3% lower. U.S. benchmark 10-year yields also eased off a multi-year high.
We will now look at the top news in the agricultural sector.
Russia's invasion of Ukraine will create a global wheat shortage for at least 3 seasons by keeping much of the Ukrainian crop from markets, pushing prices to record levels, Ukraine's agriculture minister told Reuters. Ukraine, sometimes known as Europe's breadbasket, has had its maritime grain export routes blocked by Russia and faces a maelstrom of other problems, from mined wheat fields to a lack of grain storage space. Ukraine will fall out of the market for a long time, Agriculture Minister Mykola Solsky predicted in an interview. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.